Hello everyone, this is Brandon Garrett from Snow Garrett Wealth Management with our economic update for December 2018. In this month's video, I'll discuss some of the major headlines that influence markets in November. I will also provide insight into what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. November closed on a strong note despite a month of volatility. Details like trade disputes, oil supply, and dropping prices caused markets to fluctuate throughout the month. By month's end, however, investors showed optimism as the markets rebounded. For the month of November, the S&P 500 rose 1.8%, the Dow gained 1.7%, and the Nasdaq experienced a light 0.3% bump. One reason for November's upturn was the annual G20 summit and the anticipated meeting between President Trump and China's president. Ahead of their session, the Dow rallied nearly 200 points. The leaders plan to meet to discuss cooling down the tense trade environment in hopes of finding consensus between the two countries. In addition, President Trump, the President of Mexico, and the Canadian Prime Minister signed the U.S.-Mexico-Canada Agreement, which still must pass Congress. While some are hopeful that the North American Free Trade Agreement replacement will resolve trade disputes, others remain skeptical. G20 news also impacted oil, which had its largest monthly decline in 10 years. Continuing from October, oil prices fell 22% throughout November on fears of an international surplus. Leaders from Saudi Arabia and Russia met at the summit to discuss solutions before OPEC's December meeting. These developments boosted investors' confidence. Updates on interest rate hikes also helped November finish on the upswing. On Wednesday, November 28th, Fed Chairman Powell remarked that interest rates are close to the current neutral range of 2.5% to 3.5%. His comments seem to suggest that the Fed may throttle back interest rate hikes, which caused stocks to rise. Still, economists expect interest rates to increase in December and in 2019. Additionally, a variety of key data was released in November that suggests the U.S. economy is still on track for growth. U.S. factory production climbed higher than expected, with the ISM Manufacturing Index beating expectations at 59.3. Any number above 50 registers growth in the industry. Still, construction spending dipped for the third month in a row, falling 0.1%. Consumer confidence remains high, though it slipped in November after an 18-year peak. The index suggests that some Americans worry about their income and the state of business in the U.S. Nevertheless, tax cuts and a solid labor market have helped boost consumer sentiment. Further, we learned that economists predict more than 200,000 jobs were added in November. This development keeps unemployment rates hovering near 3.7%, the lowest in 48 years. Also, revised third quarter gross domestic product showed a 3.5% increase, with corporate profits reaching 6-year highs. Together, these healthy indicators suggest that the economy is on the right track as we close out 2018. As additional data and information from November becomes available, we will have a clearer understanding of the month's performance. But with trade and oil conflicts and talks at the G20 summit, investors can now turn to December and the new year. As always, we encourage you to continue to focus on the fundamentals. That's it for this month's economic update. If you have any questions about anything we discussed, please give us a call at 817-550-6750.